With over 20 years of combined investing and trading experience behind this channel, I'm going to show you exactly how I would start a day trading career if I had to do it all over again, from scratch. Before I built a scalable system that now delivers $3,000 to $5,000 trading days, I wasted years burning time, burning capital, and spinning in circles. So if you're just starting out or you've been stuck trying to figure it all out alone, this is the shortcut I wish I had. You're going to get the full blueprint, a simple foundation, the tools I use, the mindset that changes everything, and a strategy you can apply right away. Let's build your trading career the right way. How markets really work. Let's begin with the foundation. How markets move. Forget the indicators and chart patterns for a moment. Every price move you see is simply supply and demand. If demand outweighs supply, price rises. If supply outweighs demand, price falls. This back and forth is what creates volatility, and volatility is opportunity. Our job as traders is to find asymmetric entries, low-risk, high-reward setups that exploit short-term imbalances in price. Investing via trading. Before we dig into the plan, here's why most people fail. They confuse investing with trading. Investing is long-term. You might risk $100 to make $130 over 12 months. That can make sense if you have a large account. But if you're starting small, that growth rate won't move the needle. Trading zooms into the short term. That same $100 can return $300 to $800 in a single day, when managed properly. We're not trying to match the S&P 500 year after year. We're here to outperform the market in real time. Trading is about finding edge today, not next year, not in 10 years, but now, using repeatable systems for short-term opportunities and tactical execution. The tools you need. Let's talk about what tools you'll actually need to start trading the way we teach here. Not dozens, just 3 simple tools. First, let's introduce TradingView, used as your visual dashboard into the markets. You'll use it to track price action, mark up charts, draw trend lines, apply Fibonacci levels, and identify fair value gaps. Next, you will need a broker or exchange, where you place trades. Futures platforms like TopStep or crypto exchanges like Blowfin or CFD brokers work. The key is speed, reliability, and risk control. For crypto trading, Blowfin is a great option because of its low fees and no KYC requirement. Last is a trading journal. This is non-negotiable. Without it, you repeat mistakes. With it, you grow. Use it to log your setup, including entry, exit, reason, emotion, and outcome to better understand your system, and tweak it for success down the line. Imagine you are a scientist building an experiment. Your journal is how you track and record variables in order to perfect the experiment over time. Next up is the psychology reset. Let's reset your psychology, because mindset is everything. 3 toxic beliefs that ruin new traders. Losing a trade is bad, but it's not. Losses are normal. Control them and move on. Being wrong is bad. Not true. Even great traders are wrong often. Exit quickly and stay objective. Profit means a good trade, not always. If you broke your rules, it's still a bad trade. Let's look at the math. You take 10 trades. Looking at risk to reward, where max risk is 1R. You end with 7 losses at negative 1R each. 3 wins at plus 5.2R, plus 2.5R, plus 3.1R. Net gain plus 3.8R. Win rate isn't everything. Your edge is, and your edge is risk management. Here's the trading math made easy. Now let's talk about position sizing. The formula to calculate this is risk divided by stop loss percent equals position size. Let's say you want to risk $100. Your stop loss is 5%. 100 divided by 0.05 equals $2,000 position size. If you apply a risk to reward of 1 to 3, you are then risking $100 to potentially gain $300. Risk 1% of your account. Stay in the game. Let your edge play out. Chart basics plus analysis framework. Charts tell the story of buyer versus seller. Here are 3 tools we use to build the framework of a working trading system. Trendlines. Think of trend lines as the lines connecting the dots in a story. You draw them along the peaks, swing highs, and valleys, swing lows of price. When price breaks above a downward trend line and then forms a higher low, that's a clue buyers are stepping in. It's often the first signal of a possible trend reversal. This is how we spot when the market is changing direction, before it becomes obvious. Fibonacci retracement. After a big move, like a strong rally or sharp drop, price doesn't just keep going in a straight line, it usually pulls back. Fibonacci helps us measure how far that pullback might go. We pay close attention to the 50% and 61.8% retracement levels. These are zones where the market often pauses or reverses, and they can become great entries with confirmation. Fair value gaps, FVGs. Imagine a three-candle sequence. A strong candle moves quickly in one direction. A small pause follows, then another strong candle continues the move. This leaves an imbalance, a price area that didn't get filled. Smart traders watch for price to return to this gap. If it does and finds support or resistance there, it's a signal the move may continue. That gap becomes your trade opportunity, especially when paired with structure or volume confirmation. Building your own strategy, reviewed and refined for clarity, flow, and teaching value. Here's how I build profitable systems from scratch, and how you can too. Step 1. Start by watching the market. You're not trading yet, you're observing. Look for a repeatable pattern that makes sense to you. If you're just getting started, focus on the simplest structures. Clean breakouts from key levels, support and resistance retests, or price reacting at Fibonacci or fair value gap zones. These are reliable starting points for any system. Step 2. Turn what you're seeing into a clear set of rules. This means defining what the setup looks like, what triggers your entry, where your stop goes, what defines your target. Step 3. Open up TradingView and use the bar replay feature. Scroll back to a clean chart and test your rules on historical data, trade by trade. Write everything down: entry, stop, target, reason, and outcome. Step 4. Track your results over a series of trades 50 or more. Don't focus only on how many wins. If your win rate is 40%, but your average win is twice the size of your average loss, you're profitable. Step 5. If it works, move to a simulated account. Still paper trading, but with live markets. Build confidence, then go live. Use small size. Focus on consistency, not cash. That's how a system is born, by observing, testing, refining, and building trust in your process. Here is a strategy example using fair value gap plus trend break. You see a fair value gap in a key area. Price breaks a trend line. You enter at the midpoint of the gap. Stop goes above. Target next liquidity level. Risked $100, made $1,200. Even with 5 failures, one good win like this keeps you profitable. Let's recap and review next steps. Here's your primary focus. Understand price movement. Master your mindset. Use proper sizing. Build rule-based systems. Then test, refine, scale. Next video, we will dig deeper into technical analysis. If you are looking to learn more on any topic relating to trading or investment, please comment in the chat. Subscribe to Ultimate Traders Lab today, and let's build your trading edge, one system at a time.